Hello everybody, this is Brandon from Galaxydoc Market. Today is May 11th, 2025. It's Sunday. It's about 8:23 a.m. as I'm bringing you this week ahead market analysis. My topic for today is new market order. And as you can see Ripple slash XRP coin. And again, it's an apple with a little bite taken out of it. It's the old Apple logo, right? So here's the disclaimer. Please read it. If you agree, please move forward. Pause it, obviously, to read it. And then, of course, we are active on x.com/Galaxydoc Market. We are still posting on YouTube, but for some reason, I'm just not, it's just not displaying anymore. And it's probably because of the things I've said, but I've got to report what I see. For all your benefit. But a lot of the information and a lot of the engagement occurs on x.com. We're building this community. All right. So U.S. stock market holiday hours, and we have to keep track of this. Sometimes around this time of the year, I lose sight. May 26th. So we're a little ways off. But I think in the next a little over 2 weeks, we're going to have another holiday shortened week, which tends to be, in general, choppy with a grind higher attitude. And that's why I bring you these things. Just plan for that. Okay. And if you're overly bearish or if you're overly bullish in this market, I think that's a bad stance to have. We are working away the relief rally, as we talked about, and we'll talk to you about what's happening in the stock market and where we are in that regard. Okay, so let's move forward. All right, so here's what I think, and there's a lot of potential black swans, and I think one of the biggest black swan is Trump is warring with the Federal Reserve Bank, and frankly, for that matter, kind of the New World Order, right? The deep state, as people would like to talk about, and this is probably why I get banned, but we need to talk about it for what it is. The Trump presidency and the Federal Reserve Bank are at loggerheads with each other. It's very, very clear what Trump is doing. He's daring the Fed to either hike rates or cut rates. He's suggesting that they cut rates and they remain steady at this past week's FOMC meeting. And truth of the matter is Fed's stuck. There used to be an illusion that the Fed could control and steward the economy through adjusting interest rates and money supply. And this should be the job of the Treasury Department. As you know, the Federal Reserve Bank is a private for-profit bank. How they retain the ability to control money supply and control interest rate is beyond me. But I think that's what Trump and Fed are fighting over. They're fighting over whoever controls the money supply, whoever controls the borrowing costs, basically controls the world and the nation. Okay, so let's look at we're going to be looking at the Apple price action. Apple has been lagging, okay? And we're going to watch the 10-year Treasury yield. It has not come down, okay? And so no matter what Trump is saying about in terms of the borrowing costs coming down, inflation is getting better, all we have to do is, I respect Donald Trump, but I respectfully disagree that the 10-year Treasury yield is telling you that I'm disagreeing, and it's disagreeing with Donald Trump. Okay, things are not cheaper. Gas prices are not at $1.99. It's at $3.70 right now here in Arizona, where I am based, and just the cost of living, it continues to skyrocket. The mortgage rates have gone up from, I believe, a prime from last quarter or last month, 7.05 to 7.35%. So the borrowing costs are not coming down, okay? But the biggest one that you want to look at is this JPY 40-year spike, okay, on the rates. Okay, same thing with 10-year yield. They're going higher. Why? They're dumping their bonds. Okay, this JPY is important because there is a element of the carry trade that exists in which without it, the whole world trading community and the liquidity collapses. Okay, this spike is not a good thing if you're a bullish person. And then, of course, there's people calling for gold and silver apocalypse, and I think that's premature. Gold, guys, hit 35.09. It's going to pull back. I think we're putting in a nice sideways consolidation. Yes, silver has been frustrating a little bit, but silver there's nothing wrong with it. The powers that be, I know they slammed gold and silver down illegally, naked shorts, all right? But the prices are not moving lower. Okay, so that is the warning that I want you to look at. Forget about all the Indian war and Pakistani wars and are they or aren't they going to end the war between Russia and Ukraine. That's already priced in. These are what can cause potential price fluctuations or volatility. All right, so let's move forward here. All right, so let's look at the market technical picture, and it's important that we analyze this because we went from last week, and probably one of the biggest pump jobs over the last 3 weeks. Okay, we went from extreme fear right here, and last week we were at 43, and now we're at 62. My oh my, how a week changes things, and I think we're gonna probably start teetering into this greed to extreme greed range. Again, these are levels at which I believe are contrarian. All right, we've had over 3 weeks worth of a relief rally. The internals are horrific, right? And we are climbing the wall of worry, right? We talked about that. So the worry is that the economy is going to hell, and usually this is where the rallies happen, and we have been climbing it. Okay, so we are now in the greedy range. Are we starting a new bull market? No, not yet. I mean, I think this is the time frame, and the old adage that sell in May and go away, I think has a profound significance in the coming weeks. Okay, especially this week. So pay attention, folks. All right. So the other thing is my long-term SPY uptrend line, and like I said, it tagged the upper range. We came back down. It is not unnatural for during the course of coming correction for us to have these kind of a 2 to 3 week consolidation move. The problem is that really last week was really a nothing burger, right? Yes, we did bottom off of 480, and then we're having a relief bounce. And like I said, we're going to chop around these levels, but the ultimate resolution is to the downside until we hit or go below this bottom trend line. Things are so broken at this point, I would not be surprised. And if this level breaks, I mean, that is the big crash that everybody's looking for. Okay, but in the meantime, you got to trade opportunistically. I think there's a little bit more upside left, okay, but in a very, very narrow trading range. It's better for you to build, in my opinion, when premiums are cheap, because they are cheap. The VIX is lower, everything is lower, and now the retail is foaming at the mouth. They have been the net buyer while the institutional or the big boys have been dumping into it. Okay, don't be a bag holder, folks. And that's been my message all along. Like I said, we probably have a little bit more choppiness here in terms of this long-term SPY trend line. And so have we bottomed? I don't think we bottomed. This is just a technical relief bounce that's happening. Okay. So the VIX is on full sell signal with support near 2121. And this is kind of what we're looking at right into here. Can we go down lower? Yeah, we can. Like I said in a few videos ago, I think really the buying range is between now and all the way down until about 1850. This rally has legs a little bit, and it's climbing the wall of worry. It's just that it's now running out of steam a little bit, and I'll show you what I mean by that. Realistically, when you look at the McClellan Summation Index, and I've said, hey, look, we're going to go higher. We're going to get into this box, and then we're going to start targeting these where this long-term trend line is, and I believe we may come right up to that, and this is a first point of failure that we're looking for. If it gets bullish and starts moving higher, then we're going to start seeing more divergences. We don't have any right now. We just have this continuous movement, but if we start seeing the RSI starting to peter out, and it can happen overnight, and we're monitoring that. This is why I think this relief rally has a little bit more legs, but this is the perfect time for you to be building slowly the long-term put positions or short positions for the next leg down. Okay, you don't short the market when it's obvious to you. All right, so let's look at gold. Okay, gold, everyone's saying, well, it's going to go to 1800, or it's going to go to 2800, it's going to go to, it's going to go all the way down to 2650, all the way down into this $1,800 level. Guys, the market is broken. Okay, and if you look at the level of accumulation and the fact that Trump keeps talking about the golden age and how he who holds gold gets to control the world, etc., all those crazy things, it might sound crazy, but it is true. China is accumulating gold. India has been accumulating gold. Russia has been accumulating gold. Okay, and then the question that I posed a while back is, are there any gold at Fort Knox? Okay, or are there gold that they say they have? They might have some, and are they pure gold? What I'm saying here is that, yes, we had a little pullback. We're finding consolidation right into this area, and we may chop around here a little bit, but gold is ready to explode higher. When you look at the fact that, we have a little bit of a divergence on the RSI, but we're still above this strong area. So this pullback is necessary. We've broken the uptrend line in the RSI, but we are ready to move higher. Okay, and buy some. Don't FOMO and foam at the mouth when gold. Remember, I told you we're going to hit 3,500, and we did. Now I'm telling you, within the next few weeks, we're going to hit 4,200 to 4,500, and then don't be that guy or gal that basically starts buying crap at that level. You buy when it's pulling back and when people are saying crazy shit like it's going to go to 1,800. It's not, folks. It can't go to 1,800. Okay? Now, let's look at silver. Silver is a pain trade, but it is kind of like the way the CDOs were the mortgage debt obligations during the 2008 era. I find it a little funny because I lived through that era. Go watch The Big Short, the movie, and it's really going to test your patience. But I believe without an ounce of doubt that silver is going to create some generational returns. You just got to be patient, and like Michael Burry in the movie, you got to be paying some premiums along the way. What that means is that you can't go all in, but you have to make sure that you are exposed on each of those months. Okay, and if it doesn't work out, you have to continue to have it. This is a trade that basically either you have it or you don't when it happens, and it's going to happen quickly, and I think it can happen overnight. But we are still, they've been trying to slam this stuff down, but we are basically locked in between this level and this level right here. This is the trading range, folks. All right, we've been trying to get above this 33.22, which is important. 33.22 is the simple level that basically must be, held. Okay, I know we popped above a little bit, but we keep coming back down. We're building energy to move higher. We need to stay above there permanently. When this becomes the floor, we're going higher. Okay, and I've been saying that for a while. So I'm super bullish on silver. The silver to gold ratio is 110 to 1. I mean, this is, historically, the gold to silver ratio has never been higher than 15 to 1. This is ridiculous. This is manipulation. Okay. Not only that, I've been talking about this. I know you can't see this left side of this thing, but this is a multi-year cup and a handle formation, folks. Once we break out of this handle, this is the overhead resistance. I'm telling you, 45, 60, probably not even going to stop there. Okay, patience will pay off. Okay, the US dollar, there is a rescue in progress, but it's a very weak rescue. Okay, so we basically have been chopping sideways over the last couple of weeks. The powers that be are desperately trying to keep the US dominance, but how can you keep a currency that nobody respects? Everyone wants to get out of it. We slap sanctions on every single countries that are out there that don't agree with us. I mean, we are being the bully with the US dollar, so it's natural for the rest of the world to de-dollarize. Okay, and it's natural for the country that's enjoyed the fruits of reserve currency status to continue to try to maintain its dominance. We are Rome in its last days, folks. Okay, we are corrupt to the hilt. All right. You just have this just sense of unease within the structure of our government and everything else. And so while the rescue is in progress, we're at 100.3, folks. All right. That's par. Yes, we achieved that. The question is, can we go higher, or are we going to continue to resume breaking down? And my analysis says that, yeah, we can go up to 101, but we're going to come right back down. We're going to break this 98. Once we break below that 98, God help us. Okay. Right now, the MACD histogram is pretty much flattening out. I know it's been fairly bullish from the lows here all the way up, but really we're stalling out here. Okay. Remember what I always say: wait for the stall and short it. Okay. But dollar is important. Okay, super important. This is how you know this rally is nothing more than a relief rally. Then you look at the 10-year yield. We talked about the Japan's 40-year rates going higher. Well, our 10-year yield since FOMC and since forever, we've been moving higher. We've been just moving higher. We're above 43. Really, the powers that be, especially the Fed, would like this at, oops, wrong one. Fed would like this at 38.5. My God, what's wrong with me today? Would like this at 38.5. Okay. They have not been successful. And I know you're seeing black candles, but really, that usually is at the extreme range. We've been chopping sideways, okay, on the 10-year yield. I believe we're going to at least start targeting where this arrow is. And we've broken above this RSI to the uptrending line. Histogram is getting positive. So for those of you that believe President Trump, when he's saying that the borrowing costs are lower, inflation is better, this is the gauge of inflation, folks. You print money to oblivion, and then you keep, which I believe the central bank has been issuing, Federal Reserve Bank has been issuing treasury bonds, and they've been buying it back with different conduits. I usually think that USAID and Doge, the reason why, if you look at all the Democrats that are screaming, it's because the honeypot is over. They keep uncovering these unsettling payments and, just this kickbacks at the cost of the taxpayer dollars. I don't care if you're a Democrat or a Republican or nonpartisan or whatever the case is, and I'm nonpartisan, I'm independent. This should piss you off, okay? And, this is what happens to empires that basically have outgrown its significance, and it's just holding on to its dominance. I do believe Trump is setting United States up for a bankruptcy, and this is the painful process that everybody has to go through. At a certain point, we have to take our medicine, and 10-year yield is warning of danger in that regard. Okay, so let's see what's going on with the S&P 500, and then, of course, let's see. And of course, our technical analysis. So S&P 500, like I said, everybody thinks we're so bullish and everything. Here's the daily, okay? We're basically failing off of this 20 SMA, okay? It's like a double top formation. Let's see. Can it go higher? Yeah, we have this upper trend line. We have this green line, which is 100 SMA. It can definitely go above and do all that. But realistically, this is a relief rally that's running out of steam. And the way we know it's running out of steam is the MACD histogram is now telling you that it's running out of steam. There's some narrowing of the MACD signal line, and we're going to probably start forming a death cross down into this area. Okay, you look at the commodity channel index, it's divergent. Okay, these are what you want to see. All right, and then of course stochastic is just again divergent from the top. Okay, oh yeah, but it's basically it's going to form a bullish hook. We don't know if it's going to do a bullish cross right now. It's pretty flat, so we need to monitor that. But what is fairly alarming if you're a bull, all right, is the fact that PPO-ADX is forming this type of a formation now, early stages. And so this is how you know, Okay, this is how you have to buy this when it's cheap, not when everybody's super bullish. Look at the fear and greed index. We went from fearful to greedy in 1 week. Okay, something going on, right? Here's the S&P 500 on the weekly. It's the same old crap. Yeah, we had a little rally, but still divergent. I mean, we're running right into this confluence of the 50 SMA and 20 SMA denoted by this blue arrow. 20 SMAs right here. Okay, that's going to be a significant overhead resistance. Can it get all the way up to 590? Sure, it can. It can go all the way up to this trend line. I just think that we're running out of steam. The volume of buying volume after a really strong manipulative volume. And you know what? I think Trump has the magic pen or the magic wand or whatever in the stock market. Let's face it, we don't really have a free market. Okay, they can do whatever the hell they want, but the more they rig the market, the more intense the sell-offs are going to be. All right, so that's what I'm saying. And on the weekly, this is the relief rally. It's been signaling that for a while. So this is what we have at the moment. So what we need to understand is that this is not the start of a new bull market. Markets do not go down in a straight line. And it's going to basically get to a point where the market has to bounce, get to an acceptable area where there's supply and demand issues get resolved before it can move lower. Okay, so let's move on to the next one. We're going to look at some stocks that we've been looking at. And of course, BABA is something that we're super bearish on. I believe we have topped. We have some major divergences here. And, the peak really was the exhaustion run. And it's been making a lower high. And this is no different. I believe that this is probably the terminal end. And you look at the volume, the significance of these volumes, and then these relief rally volumes are really insignificant. And we still continue to have this MACD histogram that is in the weak range. We really are diverging down on the MACD. And so, when you look at everything else from the commodity channel index, it's divergent, it's low. Yes, we have a little bullish crossover. That's what this rally was all about on the stochastics. I think that's running out of steam. When you look at the PPO ADX, it really hasn't really resolved any of these issues. Okay, so we are on the PPO ADX. It's continuing to be bearish at this point. Okay, it's something that everyone needs to understand and pay attention to. So on BABA, we're super bearish. China is undergoing a lot of deflationary credit collapse situation. Pay attention to their Evergrande and their mortgage and commercial mortgage implosion. It's very similar to what we experienced in 2007, 2008, 2009 in terms of the financial crisis. I think this one's going to be on steroids. And so anything coming out of the Chinese stocks, especially retail-oriented stocks, are going to be something that you need to pay attention to. All right. And so the accumulation distribution, when you look at this, and I wanted to show this, is all divergent. We're all diverging off in terms of average true range. So this is going to have a big move. And I think you need to have this before the move happens. A firm reported earnings. Okay, this is buy now and pay in 4 payments type of company. Guess what? Consumers are tapped out, so if they can't get it on their credit card, they're going to buy it on this type of stuff. And then you think that if they're tapped out on their credit card and they could barely buy their groceries at this point, that they're going to pay back in 4? No, they're not. And that's now beginning to be reflected on the firm. And post earnings, really, I think, try to break out. They try to give a rosy picture about how they're going to meet guidance, but their guidance was lower than expected. The problem is that this just bears a lot of entry. I think we're going to blow past this level. I think the ultimate target is down somewhere below between $20 and $15. Not overnight. Okay, not in 1 week, but it's something that's going to be a process, and you need to pay attention to this. SMCI, big fraud. My stance hasn't really changed. It's basically got this now another bear flag type of a formation, and it's going to move lower. Okay, they already pre-reported their earnings report, and in the earnings report, they think that in the latter half of September to December that they're going to clean up their act. No, they haven't. Okay, they haven't cleaned up anything. Okay, this is a fraudulent company, and you know what I think about it. I think it's going to go below 15 to 10 bucks shortly. Tesla, I've warned you that it's been bottoming on the Tesla, and it really has. I think it's really targeting that 20 SMA into this pivot level, but can it go all the way up into the 420 area? That's going to be hard. A lot of people think it's going to 420. I think it's going to peter out right here at 322 possibly, if not already. Just premature to be looking for any short positions at all. I would still continue to stay long on this name. Okay. Apple is the barometer for the market, and based on my title that I've given you, Apple is basically warning the markets that despite the fact that it's been having a relief rally, it's weak. Apple is a big percentage of the Dow, the S&P 500, and the fact that the indexes are going higher while this is warning, this is a big warning sign, folks. All right. So who's buying these crappy iPhones anyways? At this point, UPS is another barometer for the market, and really we got another bear flag formation. We're going lower, we're resolving lower. This is something you need to pay attention to. We did super great on this earnings. We talked about this for a while. It's just a barometer for the economy. The economy isn't good. Shipping is the number one thing that is a barometer for robust economic activity. The problem is that with this tariff situation, and you get all kinds of weird news, right? That the shipping containers are empty, that China's not shipping anything, and the port of Los Angeles is empty. Well, that may be true, but at this point, Trump's got to do what he thinks he has to do at this point. Okay. Walmart reporting earnings this week, and I think Walmart has a pristine setup. Divergent RSI. Failing off of this trend line, it really is. It's beginning to tell you that downward trend line is coming. Where is it going for the targets? I think really, could go to 90. I think it's going to be much lower. You're going to have to join my group to find that one out. All right. So the other one is Take-Two reporting earnings this week. Again, divergent RSIs. Topped out. I mean, this is a very, very awesome looking chart. The sell volume is the biggest at this point, and then we have divergences in the MACD. All right. It's super important. This stock has been on a tear. Okay. And I think they're releasing Grand Theft Auto 6 next year. I think that might have given it a little boost, but CCI is negative. We have stochastic that is divergent and negative. We have the PPO ADX crush indicator really hasn't been really conclusive. I will say, though, I think this type of a move is still in play, even though right now we're doing this kind of situation. They're all micro moves. There's nothing really significant about it, but I think the earnings are going to change all that. Okay, so that's what we have. Let me get this crap out of there. As far as what we're looking at, some people have been asking me about my crush indicator, so here it is. This is what I'm looking for. I'm just going to go through it real quick. This is not the full list, but it's something that I think everyone should be looking at. We talked about Airbnb. Autodesk is something that might give a good entry for shorts. BKNG. Got a sell signal there. Baba had a sell signal. Had a little recovery buy signal, which really was a nothing burger. Domino's Pizza, I'm super bearish on. Okay, they were treating Domino's Pizza like some sort of a technology company, but it's just a pizza company, folks. All right, at 479, and I think there's some cooking of the books that are going on in there. Netflix, really at the top end of the range, maybe forming a double top. Okay, the buy signal is weak. I think this is something that I know Netflix is tough to short, but once it breaks, it's going to be huge. ServiceNow, again, at the top end of the range, it's topping out, it's stalling out. Palo Alto Network, again, hopping out and stalling out. Take Two reports earnings this week. Walmart reports earnings this week. That's going to be a big tell. I think the retail apocalypse is upon us. Consumer demand destruction is real. Coin. Okay, so why is Coinbase continuing to give us sell signals while the cryptos are just going on a rampage at this point? Futu, Goldman Sachs, these are all the ones that we're looking at. IBM looks like it's ready to just crap the bed here. Meta looks like it's getting ready to start selling off. Meta's been tough to short, right? MTN, this is Vail Resorts, okay? Who's going skiing lately unless you're ultra rich? United Air, okay? Got a sell signal. I like the way this looks. Alta, sell signal. Like the way it looks. Upstart, like the sell signal. Love the way it looks. Okay, so there you go. All right. If you want to learn more about access to these kind of things, that's what we do in our alerts group. Okay, so let's go look at our earnings real quick. Earnings, the ones that I want to look carefully at is Palantir after hours on Monday. Okay. Oh, this is the wrong one. Hold on one sec. Okay, we got the real one here. All right, so we want to be really looking at on Thursday. Yeah, I just started reading it off and I realized I already did that. The ones that we want to look at is really the ones that are going to move the market are the Walmart, Alibaba, John Deere. Okay, and we have full analysis in our group here on this one. Applied Materials. Okay, so that's kind of what we have in terms of the earnings. Earnings are winding down. All the excitement is gone for the most part now. Okay, so that's kind of where we are. And then let's move on. Okay, so let's look at the cryptos. Okay, cryptos have been on a tear. So when we look at XRP, we have XRP really forming that nice bottom off of this lows right here, and we are moving higher. We were hitting like about 2.38, 2.4, but really this is telling you something. No, they're not correlated. I do not believe it's correlated to the stock market, but it is something that you want to pay attention to. I think this is a flight away from the US dollar and fiat money. Shiba Inu, I've been saying that it's been, interesting. And so we've had some people starting to establish some positions in the group. I know it's a meme coin, but, it's unmistakable. I mean, just a few hours ago, we hit 0.00001720. I think it's going to start erasing some zeros here shortly. All right, so Shiba Inu, I'm beginning to look at it. XDC, all right, XDC has been just lagging, but it's something that at this point is something that you can buy these and add and build your positions on. Bitcoin has been on a tear lately. And Bitcoin is telling you, and not that the market is going to be stronger, but I think there's flow of money out of equities into these safe haven assets like gold, silver, Bitcoin, XRP. Okay, it's super important that we deal with that. Okay, so we got that going on, and then of course on the big front, XRP is buying USDC. That rumor continues to go, but XRP is more than global reserve currency or cross-border payments, right? Just this week on the 8th, May 8th, SEC and Ripple settled. And the CFTC, this is Commodity Futures Trading Commission, is going to announce partnership with Ripple. Read between the lines. Don't look at the price action. They want you out as a retail. They don't want you in this. Okay? So that's the reason for you to accumulate whenever it drops down. Okay? Gold is now building energy to move higher. So silver just has been moving sideways in a multi-year cup and a handle base. It's ready to break out. Okay? Gold to silver ratio is above 110 to 1 right now. And silver is suppressed. And LBMA and COMEX gold and silver slam. It's just not having the intended effects that they want. And I think the deep staters and the big bad banks are basically panicking at this point. So watch XRP. Cryptos technically are flight to safe haven assets right now. Okay. Apple is quietly warning you, along with the 10-year yield and the US dollar at this point. So Apple and cryptos are warning. Watch the 10-year yield post-FOMC. It's bullish. It's going higher. That means your borrowing cost is going higher. It means the inflation is out of control. Gold is now forming a base for the next move higher. Think about that. Gold and silver moves when the economy is not doing well or there's some sort of black swan. And we talked about those black swan issues. Silver needs to break out of the sideways consolidation and stay above 33.22. Patience required. XRP and Bitcoin breakout. Watch Shiba Inu. I'm telling you. I don't know why. I don't usually trade meme coins, but it's just the chart setup is fantastic. Where the recommendation for us is gold, silver, VIX, XRP, XDC, and Shiba Inu. Bitcoin, Bitcoin's obvious, but those are the long short watches. Apple, SMCI, Baba, Walmart, John Deere, Costco, and Google. This is a relief rally, nothing more, nothing less. Options premiums are now lower. Fear and greed is now greedy. It's just that the retail bag holders never learn. And so quick scalps on ES and Q SPY up and down, SPY and QQQ. All right, so that's something that's important. Okay. All right. Thank you for listening. Follow me at Galaxydoc Market on x.com. We will continue to post our videos on YouTube, but the algorithm just is not conducive for me to really pay attention to YouTube. But I will continue to post there. Like us, share us, and above all, subscribe. I think I could use all the support on the YouTube, or just follow me at Galaxydoc.market.com, where I can basically x.com, Galaxydoc Market. Follow me there. If you want to learn about working with me, we have some internet alerts and market commentary that's affordable. So you need to email me here. Otherwise, let's get some alpha. Be careful out there. All right.